So welcome back, and today we're talking about the UK stocks that I've been buying recently going into March 2023. Just checking I put the right year down. I nearly put the wrong year down, just making sure that's correct. March 2023. Still don't know how I'm making that mistake when we're 3 months into the year, but it happens. So I'll go through the stocks that I've been buying recently. So these are stocks that I've been buying from the 1st of February to the 1st of March, just to keep that transparency up, especially when we're being in a bear market, so you guys know what I'm buying, know what I'm selling. I'm not trying to buy anything and then maybe sell it out quietly in the background or hoping that people forget about it. I share everything on here, so I hope you do enjoy the video. And just one thing that I want to make very clear, because these videos do attract in quite a new investors that probably don't watch my YouTube channel. I am a long-term investor, not a day trader. I'm not looking to buy this stock and make a 2-3% in the next week or whatever it will be. I look to hold these for a 2 to 5 year period, and also that I look to buy these positions, and if I can, I look to average over or into these positions over a 12-month basis. And that's why you probably will see me mention some stocks that I have owned for a while in this list, or new positions that I'm adding into. It's very rare that I do add a lot of new stocks into this into the portfolio. It's normally, I would say, 4 or 5 new stocks that I add into the portfolio every year. So when you do see me add something new, it is quite a big day when that happens. But anyway, let's get stuck into this video. And as always, if you do want to know what I'm buying and selling in real time instead of waiting for these videos, the place to be is on the Patreon. You join through there. It's only £1.50, £1.25 actually a week, which is pretty good going considering what you get on there. Discord with members to talk to, including me, about stocks every single day. 2 exclusive videos a week on there as well, which isn't too bad. And as well as that, if you do want to start investing, join through the link in the description to Trading 212. You can get a free share worth up to £100 as well. That's personally for me the investing platform that I use. Let's get stuck onto this list. So first of all, I've had quite a few questions about this one, S4 Capital. So I thought I'd stick this one onto the list first. I have been buying S4 Capital recently. Until the last kind of few weeks, this stock has been doing absolutely amazing. The stock is up massively. Now, the case is that I think this stock was massively oversold, so it was going to have a rally. But in the last few weeks, the stock has kind of stagnated and it's actually dropped 20%, which is quite a big dip at the moment. So since it's been having this dip, I have been nibbling a few shares because I do think around about $1 billion valuation for this one is absolutely crazy. And in fact, I think it's stupidly valued. I've always said that I think S4 Capital should be right now somewhere between a £4 to £5 stock, and even in the longer term, when I get towards like the end of the line, towards like the 5 year period, I actually think this should be pushing towards a £8 to £10 stock, which obviously is very good upside from here. So you can see why I want to be buying some shares in this one. Now, I've actually been trying to find a reason why this stock has been dropping, which we'll cover actually in a second. But for you guys that maybe have not heard of this company before, S4 Capital is a marketing company. So for example, this is an example of Nestle and Starbucks they manage, and they can make these content. As you can see here, they create 127 assets for them, and they make that out of only a 3-day shoot. They can put that on Snapchat, YouTube, Facebook, TV, banners, Instagram, IGTV, Instagram TV, and stories. They save companies money because it's more efficient, as you can see here, and also they give them more coverage, and so it's just more of an efficient digital marketing business as they have here. And obviously, as you guys know, a lot of the marketing space has been hit at the moment because people are, or companies are, pulling back on the spending, and I think that's what has freaked the share price out recently, as in 2022, and it's probably been overdone. So I think this is why it's a good opportunity, and I think that sooner rather than later we will see marketing come back. And the thing is, when you actually look at S4 Capital, they've actually been doing really impressive on the financials during this period of time for such a bad period of time, or financially what's supposed to be a bad period of time, which I think is also key to point out. But yeah, I've been trying to find a reason why the stock has been dropping in the last kind of month. One of the news stories that's kind of going around is that Martin Sorrell, obviously he's one of the key drivers for this business. It's one of the, I would say 20%, I would say, of the reason why I invested in this company. Obviously, he is the founder and the leader of this company, and he did go under keyhole surgery. I don't know if people are freaking out that maybe there's some sort of issue with his health, but I think, you know, what we have heard, he's doing absolutely amazing, and it's just a bit of a routine medical issue that is being resolved here. So I don't think that's a major issue. There was also rumours that potentially one of their clients has moved away from S4 Capital, but obviously they're attracting a lot of clients, so I'm sure that will be replaced and won't be a massive impact into the financials. So maybe that's something that's playing into maybe the share price drop, and maybe what it is people are actually looking at S4 Capital, and they're probably going to do, I think on the last trading update, I don't know if it's actually down here. Yeah, so you see here, it said that the annual results for 2022 are expected to be announced by Thursday the 30th of March at the latest. The company will provide a full outlook for 2023 at the annual results. So I don't know if people are just kind of like selling off, and people that have been in this rally have kind of taken some profit off the table, and people are kind of sitting back and go, all right, marketing's been hit. Let's see what they say in their 2023 outlook and in their annual results. So I don't know if that's what people are waiting for. So we should get that obviously in the next couple of weeks. So maybe that's a key one to be kind of putting in your calendar, and that's maybe what's going on. But yeah, I mean, going off the latest trading update, which was the fourth quarter, which was released on the 18th of January. The company looked good. The company was growing gross profit and net revenue in line with 25% guidance, which is obviously fantastic amounts of growth. They did have the 120 million of operational EBITDA for the full year of 2022. So hopefully they can keep on increasing this. Obviously 120 million, when you look, it's a 1 billion company. Obviously that is obviously really attractive as well. And that's with some of the issues with they had with the hired a bit too many staff this year, so hopefully that improves going into 2023, and that's been one of the major drags on the bottom line, and hopefully that issue is resolved, which they are dealing with, and it is clear here it's been resolved going forward. So that's been a really positive. And when you look at the company, it's just a company that is obviously it's trading at 1.3 times sales. And also, when you look at the gross margins, they've got 81% gross margins, which is absolutely crazy. Actually, I wonder if we actually have a look on Simply Wall Street, which, by the way, if you want to join, you can join through the link in the description. I think you get 40% discount when you sign up, as well as a 14-day free trial as well. So give that a go if you want. But yeah, I think Simple Wall Street say it's currently 41% undervalued. So they think it should be a £3.39 stock. But obviously, you can see from what I'm showing you so far, there's obviously clear glimpses that this is looking quite undervalued. From the CV times, it went from 215 million in revenue. It should be going somewhere around about $1 billion in revenue now, so that's been absolutely insane growth. Obviously a few acquisitions in there. As you can see here, the losses are dropping down a little bit here at the moment. That was to do with the over hiring that they had. That should resolve itself. They've normally, historically, this company's always been a bit of a break-even company as it's focused on its growth. But that issue should be resolved by the end of this year, and we should go back to break-even in 2023. So that should all be resolved here, which is what we want to see. And the revenue should go up, and they should hopefully start driving a bit more into profitability because of the scale they have now. And also they do throw off a little bit of free cash flow as well. You can see here they're expecting to do 61 million in free cash flow by the end of 2023, which obviously would then put it at a very low 3 times cash flow for the growth that you would get in this business here. And like I said, when you have a look at the ownership, the biggest shareholder is the employee stock ownership plan, which do own a big stake. But as you can see here, the next one is Martin Sorrell, who is the chairman of the board and the executive chairman, and obviously he obviously is the big driving force behind this company here as he tries to get the company to scale. And also you can see here insiders as well what you want to see, especially when the share price was dipping around that summertime. What you really want to see is insiders buying, and look at the amount of people that was inside this company loading up the share price when it was around about the £1.51 range. We even had here a £2.97. So you can see here insiders at this sort of point of view were really happy to buy some shares at around about that £1.30, 40, 50p ish. So obviously we're not at them sort of lows as we were, but we are downtrending towards them sort of levels. So yeah, it shows you that a lot of insiders thought this was very cheap as well. So yeah, I'm picking up some S4 Capital. I think it's a good opportunity. Then we've got National Express, which is having a bit of a dip today, and it's giving a bit of the jump up that it had on earnings. It's giving some of that away. So we covered this the other day, so I'll keep this nice and brief on from what we covered on the YouTube channel. It is now paying a dividend, so you are getting a dividend with this stock. And obviously, National Express, you guys will know, obviously does rail, train services, coach services, and is a stock that was really impacted because of the CV situation. People weren't travelling, people were working at home. You had to have all the likes of the social distancing on the transport. So that meant that the share price got absolutely killed, and people were really panicking about this stock. Since then, people are going back to work, people are travelling, people using coaches, people using trains, they've been winning contracts, and the share price was starting to get a lot more fairly reflected. I think that National Express right now should be around a £3 stock, and it did get there in 2021. But since then, it's given it all away, all back, and there's been no real reason why it's kind of giving it back. A few people are saying the fuel prices, but fuel prices have been hedged and they're coming down. A few people are saying because the balance sheet is a little bit negative on the debt side, but a lot of that is fixed until 2024, and by then we would hope that the interest rates do start coming down. So there's not really a clear reason why the share price has been declining, even though the fundamentals have been very much in recovery mode since the CV situation, and they've been winning a ton of contracts. One of them being this: the National Express it secured a 1 billion rail contract in Germany. So you might remember I covered this on the YouTube at the time, which was around 24th of January. And 1 billion rail contract, I think it worked out about 150 million a year. And yeah, the share price basically showed no reflection after a major win. And that's when you know there's really, big amounts of fear around it at the moment. And it is down again today. The reason why it's down is because research analysts, Librium Capital, which I don't think I've ever heard of, they came out and lowered the share price. It's crazy that sometimes these sort of analysts have this much power on share prices. But yeah, they gave a downgrade and it caused it to go down 6%, which is, unbelievable. So that's what's causing it to go down today. But I mean, they come off the recent trading update or the actual final results for 2022, and revenue was moving very much in the right way. They were improving the profitability. You see here, group EBITDA was up 31%. They brought back the dividend, and when you actually look at the potential dividend, the dividend should also have a lot more upside. As you can see here, they're not anywhere near what they were doing to the pre-CV situation, and the yield that they were paying out, or the dividend per share they were paying out, it's nowhere near that. Historically, it's been around a 3% range, which is why probably they've gone for 3% this time. But you can see here, dividend per share, they're not paying anywhere. It was nearly triple what it was. It was triple what it is currently at the moment prior to the CV situation. So you'd hope there'd be a lot more upside there, and especially when at the moment the revenue should go back to above the CV situation. Well, it has done. It's gone above the CV situation. They just need to get the profits back up there. They need to get the profit margins back up to 5, 6, 7, 8%. And if that happens, it should be a very good return. So, I did pick up some National Express. Next one's Darktrace. Darktrace, once again, it's been on a little bit of a run at the moment, which has been a little bit frustrating because I'm like, stop going up. I'm trying to build a position here. So, we'll see what happens here. But it did actually have a dip the other day. It was very brief. It dropped, as you can see here, but it's recovered it and gone higher. I thought it was a bit of a silly drop, and that was because of the results they brought out, but we'll talk about that in a little second. Obviously, cybersecurity company. I've always wanted a cybersecurity company. I think this is going to be a massive area in the next 10 years. All you keep hearing is the amount of companies that are getting affected by cybersecurity attacks, especially with the whole Russia-Ukraine situation that's been happening recently. You look at the likes of companies that have been having to stop taking orders because they're being attacked by cybersecurity companies. It's just coming more and more common, and you can see here there's going to be massive growth, a CAGR of 13.4% during 2022 to 2029. It's going to be a massive growth area. I wanted to play in here and I got one. It was Darktrace, and I think this is a pretty good move. They currently have 4 products. One of them being Prevent, one of them being Detect, one of them being Respond, and the last one being Heal. So these are currently the products they offer, and if you actually look at the customers, they're growing, and you can see here that the customers are currently spending more money with them, which is what you want to see, and they're also using more products. So you can see here the amount of companies that are actually using 4 products with Darktrace has now gone to 46%, and if you look at 2019, it was actually 5%. So that's obviously fantastic that the companies are using more and more products with them. Bit of a sticky platform. And that was my biggest concern, is that the sales and marketing is quite high and it's a competitive area. So the fact that companies are spending more money with them and also using more platforms is absolutely fantastic. Now, it dropped off recently off a short seller report, which wasn't that great. I had a look at it. It wasn't very much, and that's probably why it's recovered and actually higher than when that short report did come out. I also thought Darktrace responded really well to it. The CEO came out, posted a big statement saying why it was wrong. She also bought a ton of shares. They also announced the buyback program because they're very heavy in cash, which I thought was a fantastic response, and that's actually what gave me the confidence to finally to go buy this one. And they also came out with a trading update the other day. There wasn't really anything new in there, so I've not really got much else to kind of show you at the moment. But originally the share price did open a slightly lower, and then it went back up, and obviously it's been on a good run. So I did capitalise on that opportunity, but obviously that's for next month because that's actually in March. But just a little bit of a heads up that I bought I bought twice in the last few weeks, so just letting you know about that one. And you can see here the company is aggressively growing very well. It's running about a break-even rate at the moment, but when you do look at free cash flow, it does throw off a lot of free cash flow. We are hoping it's going to have a little bit of a dip this year, but previously in 2022 it was around 100 million in free cash flow, and then we're hoping in 2024 they get to about 100 million in free cash flow. I think it's 16 times free cash flow. I think that's not bad for the growth you're picking up here, and a massive growth area. They've got a track history of doing very well as well. If we look at financial health, very strong balance sheet. You can see here no debt on the balance sheet, and that's what I'm saying about earlier. They've got around about 391 million in cash, so that's a lot for a 1.7 billion market cap company, and that's probably why they're starting to use that cash to maybe buy up a bit of shares at the moment, which I do really like. So yeah, I have been buying a little bit more Darktrace. The next one is Cakebox. So I don't think I'll buy in the month of March, but I did buy in the month of February. It's around about 10 times earnings. It does pay nearly a 6% dividend yield, which is incredibly high. The stock, for some reason, has been absolutely devastated on the share price, but there hasn't been too much of a impact inside the company. They did come out with a little bit of a profit warning saying that they have seen some impact during summer. That's when we had the heat wave and sales did slow down, and then since then they did say that they've seen a bit of a recovery, which is great. So there was that little bit of a thing going on at the time, but nothing to kind of justify the share price going from £4 all the way down to £1.32. So I thought that was a bit of an overreaction, so I did nibble some shares. I'm probably going to hold off a little bit because we haven't actually had a trading update from Cakebox since I think it was November, so the RG one, I believe it is this month or next month. We're due a trading update, so I'm going to wait just to see to make sure the financials are still doing very well. Unfortunately, that will mean that potentially if they have come in very well, then we might see share price because it is at ridiculously low valuations, but I'd rather be safe than sorry. So I did buy some, and then I thought, okay, I'm going to wait for the next trading update. So that's what I did, and we'll see what happens. But yeah, obviously Cakebox, I do really like. There's rumours that potentially they will be expanding into a new supermarket. Obviously they have a partnership with Asda, but there's potentially rumours of a new supermarket coming and potentially being offering soon. So we'll see if that happens. But I'm sure you've seen them. They have these shops, which I do like. But what I do really like is when they do these little kiosks here. You can see one that's actually that is located near Asda on the lower mall, which is from the Express and Star. I'm not actually sure which area this is. Potentially it says somewhere. Yeah, I actually don't know where it is. I don't know. Oh, it's somewhere in the West Midlands. Maybe someone watching this video lives near it and goes, I know where that is. So yeah, I think they've got a lot of room to expand. I think they're going to double the store footprint, especially these kiosks. Honestly, there's not too many around me, and every time I actually see one, which is normally when I'm in Manchester, every time I see one and I walk past, I'm like, right, I'm going to get something, because I don't know if anyone's actually tried the products, but I think these are generally the best cakes I've ever had in my life. They're actually absolutely amazing. They are a little bit on the expensive side, which is probably why they make so much good profit on it. But yeah, I always get one when I see one because it's quite rare, and the cakes are absolutely amazing. So hopefully they keep expanding going forward. The last trading update, like I said, or the half-year results, they were still very strong. Revenue was up, gross profit was up, and they did have a little bit of a decline in the profitability. The reason why is because they were I think it was the fleet of vans they were reinvesting into at the time. So that, I'm absolutely fine with that. You know, they needed to do it. I think they put it off because of the CV situation. You got to keep investing into the infrastructure. So I'm absolutely fine with that one. If we have a look at inside the company, you can see here they are throwing off a lot of profit, as you can see here, and also you can see the forecast for the revenue to keep going up. They are quite ambitious, as you can see here from the analyst expectations. You can see they're expecting around 10% growth a year. I mean, if they grow at 10% a year at this sort of valuation, this is extremely cheap. Extremely cheap. this sort of company should be trading at a premium, especially when you consider the dividend and growth, for example. So, you'd be talking that this company should be £3 at least, £4 potentially. I personally think this company's going to grow around 3-4% a year, maybe 5% a year. Lovely dividend as well, as you would see, and combine that with a growth, the dividend, I think this will easily outperform the market. Obviously, like I said, they do pay a lot. They do have a lot of profit, and they do have a little bit of debt on the balance sheet, but they have been paying that down, as you can see here. So the balance sheet is very strong. And if we have a look at the cash, they do sit on 5 million in cash, which does sound quite low, but you've got to remember this is a 52 million market cap company, so it's not a major size, not a major big company. As you can see here, there has been a lot of insider buying, especially with the chairman of the board and the CEO as well has been buying a lot of shares during that kind of March to November period. That's when the share price was actually a little bit higher than what it is right now. So if we actually just have a quick look here, you'll be able to see that they were buying £1.17, £1.39, £1 2022, and £2.20. So they actually did pick it up at exactly the really low prices, which is actually really good. But it has been on a little bit recently, but if you actually look at that time, you would have actually got it lower than what the insiders were buying it at. So clearly that's a really positive sign that the insiders were buying a lot of shares. And if we do have a look at the ownership inside the business, you can see here that the CEO and the founder does own the majority of the shares at 25%, which is fantastic. His founder-led business with a big insider holding. He's got the most to lose out of all of us. And that moves us on to the next one, which is Alphawave. Now, Alphawave, I'm really annoyed by this. I had a few messages. I've only been in this one for about a month, and people saying, "Oh, when's Alphawave going to start doing something? It's not done anything." And I was like, "We don't want it to do anything. We want it to stay down here so we can buy more shares. In fact, we want it to go down so we can buy shares for cheaper." And whoever was posting them comments, you've cursed us, because the share price has gone absolutely bonkers in the last 5 days. It's up 23%, and I'm looking at this one now and I'm like, I wanted to really buy more below the £1 range, and it's gone absolutely crazy. So yeah, a little bit stuck now because I do want to buy more shares, but at the same time I don't know what my point is where I cut off from buying the shares. So we'll see what happens. Obviously it was always going to be a smaller position in my portfolio because it's a little bit out of my circle of confidence, and that's why I was always keeping it a little bit smaller. Also, I wanted to build some trust up with the management team, and yeah, so I don't want to chase this one too much. I'm happy that I've got some shares. I would like it to stay down a little bit, but it's going a little bit higher. We'll see what happens. But you can see here, I covered this stock for 19 minutes about 1 month ago. Why I'm buying Alphawave Semi. I'm the only YouTuber that covers this stock on here, so you won't find any more information anywhere else. So, well, apart from this video here, that's about a year old. So, yeah. Check this one out if you want more information, but I wanted a semiconductor play. I bought into Alphawave Semi. They looked very attractive. They are going to post their results on the Q1 2023 trading update. They are going to post this on the 28th of April, so that's a key date. Maybe we get a share price drop there and a bit of a buying opportunity. But this company has been doing absolutely fantastic. They basically sell solutions that makes the actual semiconductors transfer data quicker and saves power as well. They have key partners like Intel and Samsung. It trades at 35 times earnings, which does look slightly rich, but actually when you look at the growth, it's pretty cheap for the growth you're going to get. 95% gross margins. That's because they don't make any of the products themselves. If you have a look at the execution, you can see here the growth has been absolutely amazing, and it is forecast for the profit and revenue to carry on growing at very good rates. So we'll see if they do deliver on that one. If we look at the financial health, very strong balance sheet. There's no debt on there. They sit on 451 million in cash. That is correct. So half of the balance sheet is the cash. The cash is half of the market cap, which is just absolutely insane. And that's why I can justify the valuation, because of the growth, the profit, the gross margins, and they have the balance sheet here. It's an unbelievable opportunity. So yeah, if we have a look at the ownership, there is one of the executive director has been buying shares aggressively. If you have a look here, I mean, just look at the amount of shares he's accumulating at the moment. Mixture of prices, 90p, 91p, 92p, 94p, some in the £1 range, as you can see here. Some actually, if we go down here, yeah, some are all the way up to £1.50. So yeah, aggressively been buying shares, which is really positive. And you can see here that actually puts him now as the biggest shareholder at 13.64%. But there's definitely a lot of insider ownership here, which is really positive. So they've definitely got the most to lose. So yeah, I'm going to leave that one nice and brief because I want you to check that video out if you want a bit more information on this one. And the next one is Airtel Africa. So Airtel Africa was one of my best I think my best performer through 2021 into 2022. During this whole market downturn, it's kind of held up very well. And then by the time we got to the back end of the year and things started recovering, this kind of then went, I give up now, and started going down, which is a bit annoying. But hey, I don't mind it going down. This is a company that I need to have double my position size in my portfolio. So if it goes down, I'm happy. It trades at 8 times earnings, which I think is very cheap for this company. It also pays a 3.6% dividend yield. It came out with a trading update in the 9th of February. It dropped off it, and I was like, this is absolutely crazy. Why is it dropping? On the 2nd of February, why is it dropping? These are absolutely fantastic, and I bought it. It has kind of recovered since that time, if we can find that one, which is there, I believe. So you can see it has recovered since I bought it, so it was a good move to buy it on that little bit of a dip there. But however, I wouldn't mind it going lower, so I can buy some more shares. But yeah, I mean, the trading update was good. All the Q3 results were good. Customers were growing. Mobile money carried on growing really well. If you look at EBITDA's up 12%, and for 8 times earnings, you're getting a company that's delivered on this financial performance, and going forward should carry on with the rollout of 4G, should carry on growing really well, grow that profit, grow that revenue, which is absolutely amazing. You shouldn't really be paying 8 times earnings for a company that's growing revenue and profit like this. Financial health wise, it's paying down its debt, which we want to see, even though it did increase slightly in the last Q3, and maybe that's what kind of caused the drop here. And there has been a little bit of buying, as you can see here, around that £1.59, £1.13 range. So yeah, I mean, overall, like, I look at this one, 8 times earnings, collecting a 3% dividend yield, mobile money growth, you got the 3G, 4G rollout going forward. Yeah, I think this is a solid play. So I mean, I'd like it to drop. If it can drop a little bit lower, that'd be absolutely amazing. I can pick up a few more shares. But yeah, I've been buying a little bit of Airtel Africa as well. So I'm going to leave that video there now, because I think we are pushing way over 20 minutes, and I don't want to keep you for too long. But those are the stocks that I have been buying recently. So I hope you enjoyed the video. Let me know what you've been buying in the comment section as well. I'm always interested to hear what you guys have been buying. Sometimes I get some of my ideas from you guys, so just throw a comment down there, and yeah, catch you all in a bit.